guys are all paying attention. So, class.
Yes.
Now, since we are starting class, everyone knows that when we're starting class, those phones, those earbuds, okay, it's away, so we know we're all paying attention, right? This one today? This one, today's? So today is page. So everyone right now is going to put #7 on your paper. 8.1 would be 5, right? You already did that one? Okay. Now, tomorrow is Friday. What do you have to have in here on Friday? Yeah, you gotta have your notebook. So tomorrow, I'm gonna give you the other things that we are gonna add to it. So page 1 is gonna be our table of contents. Page 2 and 3 are gonna be our SMART goals. And then we started our notes on page 4 and 5. So hopefully tomorrow you guys can have that because we're writing in the notebook tomorrow. That's important. And I don't want you guys to get all screwed up from this. And you're not going to screw up your notebook right now by taping it in some awkward way because you don't know how it goes.
It's in the number 5, bro. Leave me alone. Let me tape it in the way I want to tape it.
No. Look, watch. What you wanting? Look.
Yes, I know.
Okay.
I remember how you taped it.
Okay, here and here.
I don't want to tape it that way.
Okay, you would rather have it folded up and have this giant notebook that is actually like twice as thick as it should be.
Yes.
And then you could just fold it and look at each page. But otherwise, you're gonna have it folded, and then you're gonna have to unfold it and have crap fly out everywhere. Okay? Look, get your life in order. It didn't work out very well last time. That I let you do your way. Now you do my way. Okay, listen. Yes. Okay.
I still pass.
I know, right?
We
I
got
know.
skin on our teeth.
I know. There is no skin on your teeth.
No.
That's the point.
Anyway, all right, so we're going to do income tax, and this guy's going to tape his notebook together correctly. Now, part of the reason is I have to go through and grade your stuff and flip through it and look through it and help you find stuff sometimes. So, everyone have it the same way? Great. That makes life easier. Okay, don't be difficult. Anyway, income tax. I made a mistake. Okay, the other day when I said that, who was the person that went to prison for tax evasion?
Rico Suave, you already told us.
Yeah, but we're doing taxes today.
Oh.
It was Al Capone. I think I said Jimmy Hoffa.
Okay.
Okay, Jimmy Hoffa was the Teamsters Union, and people, his body wound up missing because anyway, but still, we're doing income tax. Like I said, so income tax, the government cares more about you paying taxes than they do about your life. So they'll get people on tax evasion before they get them for murder. So this is where everyone makes sure that you pay close attention. Income tax is the percentage of your income collected by the government to fund its services and programs. Now, this is one of the things I will tell you right now so you are fully aware. I'm more of a libertarian. I think government takes too much of your money. They give your money to everyone else. Okay? There's this country called Ukraine. We have sent them close to $1 trillion with a T just so they can do their thing. I'm like, what about me? That's my money, and you're sending it to someone else. They don't pay taxes, right?
No.
Are they going to give it back to us?
No.
Hell no. We're sending money to other countries when we got people here that need assistance, right? See, take care of our people first. Stop taking my money. Okay, did you get a real check? Like a real check. Like a real check, like not getting paid under the table with no taxes deducted or anything.
Yeah.
Okay? How much of your paycheck did government say, hey, we will let you keep this much?
I don't know. My aunt's a financial.
Okay, maybe you should. Because when you get a real paycheck, so let's say for instance, Hobby, okay? Smart kid. He's gonna work 20 hours in a week, okay? 20 hours, it's not bad. You're still in high school, right? It's not bad. He's not full-time. Okay, Javi is gonna get paid $20 an hour. You got the calculator out? Yeah, I know. So, $20 an hour for his 20 hours. How much money should he bring home in a week? $100, right? But now, thanks to El Governmente, his taxes, they withhold money for taxes. So he's going to bring home about, take your $400, multiply that by 0.68. $272. So his bring home is going to be $272. That's a whole lot of money that, you know, the government says, hey, we're gonna hold this for you. That's a lot of money, right? Okay. Now with that 272 he just brought home, he needs to put gas in that car to go to work. Okay. You know that 35% or 35 cents on every gallon also goes to taxes. So the money that you spend to go to work, also, they get some more tax on that. You know that car that you drive to go to work, every year you pay a registration fee, which is also a tax. It is a permission to drive that car. Okay? So you need to pay just to have permission to drive that car again. Okay, so on top of that, okay, you are at your job, you're like, dude, it's lunch break. Avi, it's lunch break.
Yeah.
Where are we going to lunch? Okay, there we go. So, how much is a burger there? Let's say $10 for a burger, right? Okay. So now, that burger that you got right there, guess what? You also have to pay what? Tax on that burger right there. But like, dang, I pay tax on making the money. I pay tax on going to work. I pay tax on the money that I'm spending so I can even survive. That's crazy, right? So, I just want to be honest as we go through and do this so you guys feel like, dang, this guy is all up on, why? He's like anti-government. No, I'm not anti-government. I'm anti-tax.
Yeah.
Stop taking my money.
That's
What's
why
up,
I always
homie?
broke.
I don't know. Info, who this? When? When that happened? Okay, sit right there. So, along with our taxes, that's they send it on all kinds of other things, and our government is still running a deficit. Do you know what a deficit means? I know you do that because you're playing Retro Bowl right now for some reason. Okay, a deficit is you spend more money than you take in. So Javi, he's got that job, right? He's supposed to be making, how much did we say, $400? $400 a week right here. He's supposed to be making $400, but now he's spending $800 every week. But the government doesn't. I know, but guess where they make their money from? That's your money. That's the money they're taking from you, and then they're spending it on all their stuff. But they're spending more than they're bringing in. So every time they're talking about, hey, you know, we need to do this, we need to do this, I'm like, hey, you know what? We you know, what's our funds being used for? So I wanted to be completely obvious and my opinion on this before we start into taxes, because, you know, it is a close and personal thing to my heart. It really is. Because tax is theft. Anyway, determine taxable income. Calculating your federal income tax begins with gross income. Okay? It's gross how much they take from you. Okay? That's the amount of money. In the analogy we had, Javi, his $400 that he was supposed to be making would be his gross. That's gross, how much money he actually made. Total income for the year. This includes income from wages, tips, interest, or dividends from investments, unemployment, compensation, profits from a business, rental income, even game show winnings. It does not matter whether these winnings are in cash or the form of items such as cars and vacation. Cash. That's important. So that means that Javi, who after he got fired from that job for, failing a drug test, okay, he was working for, Lucky's uncle, okay, and he was paying him under the table, right? He was just paying him cash, right? So because he was actually getting money, and he wasn't claiming that he was getting money, that's tax evasion. That's what we're talking about. You need to even file that on your taxes that you got this money. You're supposed to claim this. And then if they find out that you did not claim it, you go to jail. I know, right? Okay, cash or forms such as cards or vacations. Come on. Did it really just stop? There we go. All right, determining taxable income. Next step in calculating your federal income tax is to determine your adjusted gross income. Adjusted gross income is figured by taking gross income. What did I say? Gross is the amount of money you're supposed to have. Okay? Taking gross income and subtracting certain allowable amounts called adjustments. These untaxed portions of gross income include contributions to certain retirement accounts, tax-deferred savings plans, interest paid on student loans, and some self-employment costs. Okay, so self-employment costs. So that means that if you are self-employed, you work for yourself, you have your own side hustle. Anything that you buy for your business so you can make money is going to be one of these things, these self-employment costs. In a traditional tax-deferred retirement plan, you get to deduct the full amount of your contribution from your gross income. You pay taxes on the money later when you withdraw it at retirement. Now, this, I'll tell you right now, from experience, is a bad idea. So if you're putting money away and there's no tax being taken out on that money, that means that your money is going into an account. Do you guys know about investment accounts? Can someone tell me about an investment account? What is that? What do you think investment is? Okay, on a company, right? So you're investing it. But why would you do that? Why would you invest? Yeah, you'll make a percentage. So are you going to get profit off of that? Yes, very good. So an investment account is the same thing, but you're going to use that money to invest to hopefully earn a profit off of that. So, with this one right here, any money that you are not taxed on now, let's say for instance you take out $100 now. You invest it. That $100 over and over being invested over the next 20 years, I really would like you to pay attention clearly. Get off that, stop making stupid angry face. Okay? So that investment 20 years from now is turned into $10,000. The government's okay with it because you did not pay tax on $100, which would have been $30 maybe. But now they're going to charge you tax on the $10,000 when you pull the money out. So the government's going to get more tax off of it. So it's better to pay your taxes beforehand, and then it's not taxable afterwards. So hard, right? You're chilling, okay? You have a fixed income. Every month you get a paycheck from your bank, right? They're like, all right, here's your spending amount. This is what you can spend each. So your living expenses, right? So, but imagine $1,000 a week. That's what they're giving you in this. But now, government says, hey, you didn't pay taxes on that before. Let's take some taxes out of it now. So that $1,000 just now went down to $700. That's a big difference. Okay? So there is different things right here. So you pay tax on the money later when you withdraw it at retirement. But if you're retiring, that means you're not working no more, right? So if $700 a week is not enough for you to live on, what are you going to have to do? Get a job, but then you're no longer retired, are you?
No.
So the point of retirement is actually having enough money for you put away so you don't have to keep working, right? Okay? That's the point of retirement. It really is to have enough money in your savings and having enough put away so you don't have to keep working. You can if you want to. You can work part-time. You can be that Walmart greeter. Yeah. Okay. You know that creepy guy as you walk into Walmart that they're only there just to tell you hi?
That really is him.
Yes, I know it really is him. Okay, yes. Anyway, so, and he's going to be watching this video later, so it's going to be funnier. Okay, so the Walmart greeting, a lot of those people don't want to have a job. It's just they invested poorly. So when they're 70 years old, they got to go back to work to try to make ends meet because the money that they had set aside wasn't enough to live on anymore. You got to be careful, especially for retirement. And that's why I'm telling you this right now. How many people have actually told you, have you started a investment, a savings account, a retirement account? Anyone actually tell you that yet? Started for my kids day one. You have a savings account? Okay. Is that savings, like you're actually putting it away and not touching it? Or
So I take out 200 each paycheck.
and just leave it alone, right? Perfect. That's actually a smart thing to do. Start putting stuff away because things happen and you need to actually have the money, savings. Hey, stuff like that, right? So Javi's hoopty, okay, you know, with the spare tire sitting in the back seat, trunk rattling, right? Okay, yes. So he's going to hit a bump and his tire's going to fly off. Okay, it's going to fly off. He's going to be like skidding down the street.
No, that's crazy.
I know, right? And so he needs to actually get that car fixed so he can keep going to work, so he can keep making some money. Got to have that money on the side. You need some stuff saved up. But now, if you do that over and over again, when we start talking about compound interest, that $200 that Javi's putting away every month, right?
I get paid every 2 weeks.
Oh, okay, so $400 a month. That's pretty solid. It really is. So we could actually, we'll come back to it when we're actually doing the compound interest problems. We'll come back to it, okay? Because that one's going to be really good when we start looking at the investment potential of this. Okay? So when you get a credit card or you get a bank account, open a bank account, and they talk about savings, AYP, interest rates, and stuff like that. You guys seen that, right? Any of you guys actually even ask what that means? The AYP, the interest rate. You have an account, but did you guys did they tell you about what the interest rate means? What do you think the interest rate is going to do for you? Okay, it should go up. So what that means is the amount of money that you keep in average in that account, they will give you a percentage. They will give you incurring interest. So you could make money on your money sitting there. No one ever talked about that? There we go. So things like this, some of y'all are going to have to really adult here soon. Like Rigoberto. He's going to have to adult here soon. Can you believe that? That's crazy. You got 4 months. That's it. 4 months. 4 months, and that's it. You should be done. You should be graduating. Got to adult for real. Now, for this next one is determining taxable income. So we take our adjusted gross income, which is made from our gross income minus adjustments. Our gross income, what do we say gross income? So the analogy of Bobby, how much money was his gross? 400. Remember, think of it like this. Think of it like this. Gross income. It's gross how much they take from you. Think of it like that, okay? So he's supposed to have $400, right?
Yeah, I have.
So that's gross. Okay, think of it like that. That's gross
Yeah,
because how much did they actually give you?
270.
272. He was able to walk home with a paycheck of 272.
Yeah,
So that's the analogy. So hopefully you guys could actually think of it like that. Every time we're talking about gross, that's the amount that they have before they take out taxes. Hey, you weirdo, did you grab a paper? Okay. Minus adjustments. So, right here, what we're going to do, standard deduction is a lump sum amount that you can subtract from your adjusted gross income. The IRS sets this amount. Most young people take the standard deduction because their financial situations are relatively simple and they're not eligible for numerous deductions associated with owning a home or making charitable contributions. Now, along with that, anyone know what the word tithe means?
Isn't that savings?
To give? Give what? Okay, so it's usually referred to as you're donating to your church. Okay, tithe refers to 10%. So if you're giving to your church, you're tithing to your church, that is a charitable donation. That you could take off, that is an adjustment. So that means that the government will take less money from you because you're tithing. There you go. So, let's say for instance, okay, there is a, I don't know if you guys actually involved, but yeah, there is a church summer camp. Okay, and you're like, all right, I'm gonna donate $200 to my church to this program because I want to help so and so go to church camp. You could deduct that money from the amount of money that your government is going to take from you. So that means that you don't act, so you know where your tax money is going to go. So instead of you giving that money to the government and they sending it to Ukraine, you know where it's going because you're sending your nephew to church camp. Yeah, you missed it. You weren't here. So it's close to $1 trillion they've given to Ukraine so far. No, we're in debt $29 trillion. So that's how much we're in debt. We're talking about that. And so I said earlier, but someone missed it, the word deficit refers to we are spending more money than we bring in. And the government, do you know how the government makes money? Your taxes. They take money from you in form of taxes. So they're spending more money than what they're getting from you. So how are they going to recuperate all that money that they're spending? How are they going to get more money? More taxes. So they're going to keep spending money because they need you to pay more taxes. And then when they get more taxes from you, hopefully they'll stop spending so much money. That's not going to happen. Itemized deductions are deductions you list separately if you have incurred a large number of deductible expenses. Itemized deductions include interest on home mortgages, state income taxes, property taxes, charitable contributions, and medical expenses exceeding 7.5% of adjusted gross income. Taxpayers should choose the greater of the standard deduction or itemized deduction. Now, good news and bad news. Okay, good news, we have all this stuff right here in writing for all you guys to go through and find this stuff. Bad news is, it changes every year. So right now I'm teaching you this, but it's already wrong. because the tax code has just changed, where all the percentages and all the amount of money, it's all changed. So when it comes to time that it's time for you to do your taxes, everything that you're learning here, the percentages are different. The amount of monies are different. What you can and cannot deduct are different. But it changes every year though. So what I'm gonna do, when we're done doing this, I want you guys, so everyone that had a job this last year, you guys are gonna try and get a hold of your W-2 or your last paycheck of the previous year. Okay, the last paycheck of the previous year, and that should have all your information on it, where it has to do with your state tax, your federal tax, and all that other stuff. And then when it comes time to do your taxes, because we're not actually doing that yet, we'll go over this year's, the new changes to this year's, which is different than this. Crazy, right? Changes every year. So it's almost like I have to give you a new textbook every year on this stuff. But instead, I'm going to teach it item by item as we go. So what these things are is important, more important than, what it is individually. Like right here, it just says 7.5%. Okay, that's not very helpful. So taxable income is my adjusted gross income minus deductions. And before we actually get into this, right here, I am going to stop for today, and then we're going to pick up this on tomorrow. Before we actually get into this, because I want you guys to actually really look at your own finances, look to see if there is anything that you have for investments or savings and all that other stuff. Look at your checking account. Look at your savings account. What is your interest rate? How are you making money off of this? Or are they just charging you a fee every month? Are you losing money every month just to give them money? So, when you come in tomorrow, we're going to actually continue with this by going over example 1. Okay, and we're going to use the rest of this time to finish up your homework on 8.1. So, make sure you all like, share, and subscribe. Hit that notification button. Support my channel.